is ITR and why you should file it? Income tax return is a form which a person is supposed to submit to the Income Tax Department of India. It contains the information about the person's income and the taxes to be paid during the year. Information which is filed in ITR, it must pertain to a particular financial year, that is starting 1st April and ending on 31st March of the next year. The incomes can be of various forms like income from salary, profit and gains from business and profession, income from house property, income for capital gains, income from other sources like dividend, interest on deposits, royalty income, winning on lottery, etc. ITR-1 form is filed when individual's total income is up to Rs 50 lakh arising from the sources like salary, house property or any other income like dividends or interest. Even an individual having agricultural income up to 5,000 can file a return in ITR form. ITR-2. ITR-2 form is used by an individual or the Hindu undivided family and which is not receiving the income under the head profit and gains from the business or profession. It means that it must be filed by individual or the Hindu undivided family not involved in any kind of business so that they are entitled to file the return under the ITR-2. ITR-3 is filed by an individual or the Hindu undivided family having the income through profits and gains from the business or profession. It also includes the income from house property, salary, pension, capital gains, and the income from other sources. ITR-4 will be applicable on those who have the presumptive income scheme according to the section 44A-D and 44A-E of the Income Tax Act. Interest and other income shall also be included in return. Most of the taxpayer having the misconception that the interest arising out of the tax saving fixed deposition is tax free, but they do not know the fact that this kind of a deposit will help them in saving the tax provided under this section 80C, whereas the interest is taxable. Your Aadhaar should be mentioned in the tax return. The clarity on the Aadhaar has come after so many legal and political battles. All the individual having Aadhaar, they shall have to mention it in the tax return, whereas the individual who does not have Aadhaar is exempted under this. If you don't mention the Aadhaar number in the tax return, the return will be accepted at that point. But in future, you may get a legal notice for not mentioning the information which is required in the returns. A drastic change in the tax outgo can be seen at the time when people change their jobs and the new employer lacks in taking into account the income earned from the previous job. Therefore, the tax is deducted on thinking that the income from remaining month is only the income of the year. But at the time of filing the tax return, this mistake is captured. Actually, at that point of time, the income from two employees, they are added and the deduction and exemptions are made accordingly. Further, it is best to inform your new employer about the income from the previous employer so that the deduction of TDS can be made accordingly.